Welcome to today's backtest. Let's be real for a second. I believed you clicked on the video because you're a trader who is perfecting their craft, who is seeking to improve on their game. Yeah, this is not one of the best edited videos, far from it. But this video is packed with knowledge that will drive you closer to your dreams. For every backtest data we do, going to be great at trading price action, what is being told on the charts. So that said, let's dive in. The charts were selected at random. You're going back to 21st of October, that is last week, depending on the day that this video was created. Which doesn't matter because we are learning to read the charts to improve our craft. Let's get on to the charts. Let's dive in. Every time I come to a chart, I like to keep my process simple. Every trader has these three levels. Yesterday's closing price. Where did price close at? The high of the day, that is if it's already set in place, or the low of the day. It doesn't matter what setup you trade, it doesn't matter who you are, these three levels are available to all traders. And that's what I always want to base my trade ideas from. Remember, you're never sure whenever taking a trade. We only have trade ideas that we hope to either be validated or not. Coming to my charts, that's the first thing I want to mark. I want to mark the closing price. So here, what's the closing price? Friday's closing price. I want to have that level marked. Once I have my levels marked, I want to understand what price did and respond to that. Basically, we want to understand, we trade the New York session and market moves in 3. By that, when I come to the market, Asia session will have traded and London will have traded. So I want to see these two sessions and understand what market did in response to the levels. The mantra that my mentor taught me was this: timing, levels, behavior of price. So we come to the markets when the session starts, the levels, the 3 levels that I told you every trader has: the closing price, high and low of the day. And from that, what is price behaving like? Let's, even before we dissect the day's trade, let's talk. I only trade 2 setups. Very simple. The pump for the dump and the dump for the pump. What do we mean? The market could have pumped initially in the earlier sessions. We pump, and then maybe the market coils. And what do I expect? To take a dump trade. So we pump, we coil, and we drop. Pump for the dump. Or the market might be dumping, dropping. Then we reach a significant level, we coil, and I expect to take a pump trade. So the dump, coil for the pump. Does that mean every time I come to the market, my idea is to rebel whatever the markets have been doing? Not at all. Remember, the market does not care what you know, what setup you trade, who you are, or anything. The market is there to do what it will do. And you as a trader, your work is simple. Come, read it, look for your setup, trade it and go. So what happens if the entire day was a buy and initially the two sessions were pumping? So do you mean, Aluta, that you will force a dump? No, 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 no. That's why we have another one. The low hanging fruit trend continuation, or depending if it cooks as a reversal. But don't worry. At this moment is where I'll ask you to subscribe, but that's up to you. We are going to be talking about these setups repeatedly. I won't get tired of that because my agenda is to ensure that with every piece of data we get from backtesting, we bring you closer to understanding the markets. Not predicting, not being the smart guy, understanding the market, so that you may learn to take the easy setup trades. So low hanging fruit. Let's see why. It does three things. The market could either trend, be it bullish or be it bearish. The market could reverse, or the market could be in a consolidation. After studying, it came to my realization that Asia, let's say it starts from a key level, right? Then we break it and start a move. When London wants to start, let me change the color. Let's say we pull back for the low-hanging fruit kind of trade, and London comes, breaks the level of Asia, and continue the direction to which Asia was trading. Here, if I get a coil in the gap session, what I'm expecting from the market is we will reverse against this volume. Simple, right? Let's understand this. And from here, I've mentioned the low-hanging fruit, but we are going to go into in-depth. So Asia starts in, right? We push to one direction. For this one, I'm assuming we're going bullish. We buy. At some point in the gap session is the time between Asia and London. It's typically usually 3 hours before London session opens. So market pulls back a little bit to a significant area. Then London gives a good trade. And key thing, it breaks significantly the previous high set by Asia session. And you continue aggressively to a certain direction. Then in the gap session before New York opens, we do some form of consolidation. So I'll expect New York to finalize the highs. And if it does exactly that, I'm expecting we reverse back to, I'll first of all watch this level, but I'm aiming to take till the closing price. That's one thing that I came to learn after doing what you are doing right now, back testing. But is it always this way? No, not at all. Allow me to clear my charts. We can also have Asia that just stays in a range. And in the gap time is where we get our first break. And London does a parabolic move to either direction, and still assuming a buy in this case. When London explodes massively, again, in the New York session, I'm looking for two things. Price could either come back to a significant level. I take the low-hanging fruit to go higher, or price could, in New York session make its high and we drop all the way back. And if in Asia we start at a level, right? We confirm the level and we start our rise aggressively. Then come the London session. We don't do anything significant. By not doing anything significant, we are almost in a coil. Yeah, we might make some slight higher highs, maybe, but it's not as significant. Just some smaller movement and we pull back. We come again, make some smaller movement, we pull back. You can, in other words, let's frustrate the London traders. If this happens, then what I'm looking for, come the New York session, is simple. We come to a significant level. Sorry. We come to a significant level, and once confirming the level, a low-hanging fruit, we want to continue the idea that was started in Asian session. So basically, the Asia will pump, will coil, and remember, pump for the dump, pump for the dump. But this one, always respect the market. Price pumps, coils, we get a low-hanging fruit trade, and continue. Hope that's clear, but don't worry, nothing to be crammed. We are going to study the charts and we'll see all this in action live. Sorry, it's backtested, so it's backdated. So we come to our charts. And what do we see? We see we first of all have marked our closing price. That's the first level we have. Even before we want to know whether the high was set or we're going to use the high of yesterday as the levels, or as the day's levels, we always will have the closing price. So let's dissect this. Price coils around closing price. Then we push higher. We push higher, making new highs on the inside. But when the session starts, we come back to the closing price. And it is from the closing price that we pump aggressively, taking away any previous high, making new highs, and price stays above these levels. You can see price stays above. Price keeps on going higher and higher and higher. Let's think. We remember in Friday, price from Thursday, that is Thursday of last week, price has just been bullish. And coming today, we stopped no one. Price just coiled, we tested the closing price and we pumped. So any new trader that comes in and while this breakout occurred, they are going to adjust their levels, their stop loss levels. When price broke these levels, what level every typical trader will do? They will adjust their stop loss to these levels. And there's one thing we should always keep in mind as traders. There is no free lunch in the markets. No free lunch. So let's see what happens in the as price goes on. Coils around and we drop. Look at who we come for. We come for these traders who have their stop loss adjusted to these levels since they're already in the money. Break-even traders, as well as giving, potentially giving London traders a low-hanging fruit setup. Remember this, we are not, I'm not trying to show you I predicted the market or anything. No, we are building our minds up to be able to spot these trades easier, to understand, to know how to read the charts. because after learning to read the charts, these things will be easy. So we come for these levels and price. After stopping out the level, we coil here. We make this level and price auctions higher. Just before London session opens, we pull back. We first of all pump in the gap session just before the session opens, making higher highs. Give a beautiful low-hanging fruit setup for the explosion back where we even make new highs. Making approximately 100 pips. Price again counts for those who adjusted their stop loss at these levels or these levels. We stop them out, and this is in the gap. So till now, we are not interested, and price keeps going higher. And here I am marking the level at which New York session is almost starting. Right before the session starts, we make a new higher high, but we can now realize the volume is slowly dimming out. The volume is slowly dimming out, and price drops, makes this lower, makes this higher low, and we make another high just before the session starts. That's early pre-New York. East African time, that is 3:00. This was 3:30. And when the session starts, we again make this high, we coil around there. Do you just come and look at this and take a trade? No. We want price to confirm us. All you do is to react to what price does. Almost retesting this lower high that was made pre-session. Then we come back, and for the first time, we are respecting the levels that was made. You can see with this volume aggression, we come and it dies down. Immediately we reach this level. Again, try a push, nothing. I still have not seen anything to get me to the market till this point. But when we come at that time, and at this time, we make these lower lows. When you see that, we know a beautiful setup is cooking. Lower lows on the inside is an indication for a pump for the dump. We have been pumping in Asia, in London, and now we have confirmed the highs. So first thing that New York session did was put a high in place. Putting a high in place, we then started building on a bearish structure. How? We made lower lows inside, lower lows in the inside. And when I see these lower lows on the inside, we start smiling. we want to push higher. No. Then you get this pump. What do? Trick you to take buys. See how beautiful this candle structure looks. The last candle structure before the beautiful trade will always put you on tilt. So when we break here, someone maybe got in buying, but my confirming what gives this trade the final touch and confirmation is the death candle. What do I mean? This candle here, it completely covers the three pushes that occurred. So anyone that bought on this candle, on this candle, on this candle, immediately they're on red. And what do? It pulls you on tilts. After that, do we release them? No. The market does not offer free lunch, this candle. And after this one, you enter, and one bar stop, basically around half this or above this one. Because if price goes any higher than that, I might have entered the trade earlier. And remember, that was all I was looking for. Since we pumped through the Asia, through London, I'm looking for the coil and the dump. And where am I targeting? The first level is where London started. I'm just looking at that level, but I will set my profit at the lows or the closing price of the day. Since I know gold is typically bullish, I'm not trying to be a hero or I'm not trying to do some science experiment. I get my money, I get paid, and we go. So after we get a beautiful entry, price just breaks through the lower high that was made pre-session, and we go all the way till this level, which we marked. This was our closing price of Friday. So let's clear our charts and let's study the next day. The drill continues. The first thing I want to do is always to mark the closing price. Yesterday's closing price. So this will be on Tuesday. What does price do when we come on Tuesday? I also mark the highs of the day. Since Monday somehow made the highs of the day, will this hold? That's not up to me to know. I want to first understand what Asia did, what London did in respect, and then trade idea for New York. Amazing. So that was the lower low, the blue line. And price today, we just started from the closing price and we started pumping. And Asia session opens up, and what do we first do? We first break through the lower high that was before we closed for yesterday. And Asia pumps aggressively, giving traders an easy 50 pips just from the open, after which price started coiling. We don't come back, we don't retest no level, we continue going higher. Price keeps auctioning higher. And in the gap time, we again don't come to confirm any level, we go higher. And it's at this that we call to take stops, you hear liquidity, whatever. I call the market what I see. Price comes and takes the stops, and after taking these lows where we pumped, we made a new high. But this high and this high, the difference is so small. We pull back, make another high, pull back. What are we doing? We are beginning some sort of consolidation. But what do we know from this type of consolidation? The high of day is not yet in place. Why am I saying the high of day is not in place? Because we are making new higher highs. Despite the fact that may say it's smaller, yes, but it is new higher highs. Then we come back, drop to which level? This low that was made in the gap session before London, where in the third hour of London, we retest and we pump, making the high, and again, immediately after making the high, we come back to that level. So this level is somewhat of significance to us. Price keeps on respecting it. And in the gap session, just before New York opens, we begin a rally again from that place. Remember, the last thing as a trader you want to do is to chase the markets. Always trade our setups, and that's why I gave you the 3 levels, because it helps us know where we are waiting for price to come to give us the trade of the day. What we said, the easy money trade of the day. So we want to mark our levels. This level that we have discovered is somehow of significance. And we realize price is coiling below, just below the high of day. And when price coils below the high of day, I always look for price to take that level, because volume is just building right below the high of day. And remember, we are bullish. So more confluences adding to us breaking the high of day. So that's the information we have before coming in as New York traders. You first understand what Asia did, then London, to which London is the reason as to where we drew those levels. And now from London, we want to understand, we have understood that price is coiling just below the high of day, the yellow line. The high of yesterday, which was the high of the week, the high of the day, set on Monday. And I mark this place because we are looking we mark this level because we are looking for a low-hanging fruit trade idea. I'm looking, since this was the first lower high, this one and this one, I mark this one expecting to get trade, a low-hanging fruit trade from this level. Price moves higher in a pump format, then we drop significantly, trapping all the first mouse who, yeah, were right on direction, but somewhat maybe they had poor risk management, get them stopped out. Then you come to the level that we want. So this level, we're now in the level. Remember what I told you my mentor always says, timing. And that is when the session began. The levels, and finally, behavior of price. Timing, levels, behavior of price. So our time after the session starts, an hour into the session, price drops, ready to give us a trade setup. But first of all, this price action doesn't confirm any entry. Remember, we are in the minute one, in the 1 minute time frame, and that's the lowest you can get. I know there's 1 second, that's too much noise. This is the lowest you can get. So this moment, all you have to do is practice on your patience. Price comes back, makes a beautiful M, but again, the way we live, make high on the inside. What we like, price coil, pulls back, and at this point, you can get your entry, a stop loss here, and target the high of the day, which is this level, which you can target 50 pips range expansion from this level, taking a low-hanging fruit setup. But I somehow don't like this price structure because the last thing that I want is to find myself chasing price. So yeah, you can see price action was not so smooth, but the setup always delivers. That's why they call it a trading strategy. It always delivers. Price went high, and I adjusted the levels and said this was a more better level. Price pulls back to this level, recoil. And let's study this. Price after making higher high, we come back, test this level for a low-hanging fruit idea trend continuation, respecting the bullish structure that was made this level. After we confirm this one, we don't come to break it, so we are still bullish. Higher highs on the inside, higher highs. We come back, coil. Look at the, compare this structure to this. The markets will not always be the same, but I always want at my levels price to cool down a little bit. So price comes, we retest it, and we coil. And what do? We make higher highs on the inside. And this higher high is beautiful because it somehow also tests the high of day that was made yesterday. And we pull back. And it's at this pullback where we get our classical entry on these beautiful bullish candles. Enter, stop loss. No need for the extremes, because if price goes lower, you were in early or wrong. Price around, stop loss around here, entry, and we target our 50, 60, 70 pips. And price moves smoothly. See, no noise. When you wait for the right, for price, for the behavior of price to be right, the trade always will be easy on yourself. So this thing of, oh, mastering emotion, trading without emotion, no. Just perfect. Come, let's do this game every 2 days of the week. Polish the game so that you may make your trading work easier. Price coil. But this was a trade idea that we waited and couldn't trade because it was out of our timing window. When it's 6:30 East African time, I close the market and I call it a day. So this day, because at this first trade idea, at this first trade opportunity, yeah, there was this idea to enter, but it did not meet all my criteria, and we did not take that trade, instead adjusted our levels. And when this level was tested, it was out of my timing window. And this will happen. My mentor says this: if 90% of traders learn to just sit on their hands 90% of the time, we all will have made money. So this was a day, we call it no trades. Again, we start a new day. The drill continues. First level, closing price of the day. And we realize price closed higher. Let's zoom in. At the close of yesterday, we have marked that level, and we realize price just coiled and started a bearish move. We come slightly testing it. Okay, we miss it, and we drop to the lower highs where price coils. So we still respected the bullish structure. And when price coil in the gap in the gap before London session, price auctions back to the closing price. And we break through, making higher highs. And when London session starts, we first retest which level? The closing price. And again, London continues making higher highs aggressively. After London made the high of the day, we pull back and look at this. Price, what I like about the market is once you learn to read it, all the tricks, all the cries will be no more. The market keeps on repeating itself. I don't know what the name is, fractal or it's forgive me. Yeah, that name. In fact, engage with me. Write it in the comment section if you know it. Write for me, what's the name when markets that describes how markets are the same? Fractal. I think something of the sort. Yeah. So price after pumping, we have this level. price comes. And what is your thing? Any breakout trader, all these traders at this level, immediately after this, there was no back and forth, one way, boom, and they're in the red. This is the 5 minutes time frame, and we have 1, 2, 3, 4, 5 candles. Puts them all in red. In fact, on the second candle, they're already in red. And price coils there. So price coils, and we realize price does not even want to go above. Because when we go above, who are we releasing? Yes, we are releasing these traders. Do you want to release them? Why? Why should we do that? And we know there's no free lunch in the markets. So let's zoom in. And Wednesday, there was no news. So there was no need for me to be in the market before 4 p.m. East African time. And price began an early drop pre-session open. That's good. When price does this, I'm looking for the low-hanging fruit. What do I want? I want price to drop. I want price to come, make a lower high. Then it is only at this lower high that I'll seek to get a trade from. So the idea is basically we come back, and now this is what we call the low-hanging fruit. We come back, get a good entry structure for now the continuation. This continuation should not come and stop at this place. If I took the right level, it should go to a level of my interest. And from this day, the level of interest, since you've already broken the closing price, the closing price was this one, sorry, and the low of day was this one. So since you've already broken these levels, I'll be targeting yesterday's closing price. No, sorry, yesterday's opening price. That will be Tuesday's closing price. Price made this lower high, pulled back, and we got our trade. Entry. After our entry, I'm targeting yesterday's opening level, which was Monday's closing price. And at this point, we take our money and call it a trade. So cleaning our charts, and let's go to the next day. That will be Thursday last week. But this day, there's one thing we need to do. As a trader, my daily routine is simple, very simple. Because they say, if you keep it simple, you can repeat it. And if you can repeat it, that's when you can scale it. I come to the charts around the same time, or the factors that determine the time I come into the charts are the same. Is there news? Yes. What time is it? Is there any news? No. So what time will I come? When New York session opens. Why should I be in earlier and give away my money or tire my mental capacity? So this day, on Thursday, we have news. We have news at 3:30 p.m. and we also have a 4:45. And since our number one role is we never trade the news. Hope you're getting lessons. Hope you're seeing areas to improve and are understanding how to better your craft, how to better read the charts. If you're getting any value this far, support your boy. Hit the subscribe button. I'm not so good at this on here anyway. I'm just doing this to ensure I can help one or two people. And as I told you, my editing skills pathetic. So you will be helping me here and there in the comment section. Tell me what you think I can do to improve. Back to the charts. Yep, the first things we always do is mark our closing price. So we mark Wednesday's closing price, and for this day, the market auctions higher. Breaking, and in Asian session, our first target we take out the lower high that was made prior to closing. And price stays around there until the gap before London session where price retests this level, confirms it, and we rally. We realize price goes higher, and in London, we are trying to work some highs. Looking back to this level, it's where yesterday the New York sessions trade was given. So marking that level, we realize the entirety of from the second hour of London, we were just working towards that level, coiling underneath. We realize we break through that level, pull back, and again we coil above, where we in 3 pushes. After that, we trap the entirety of volume above and recoil. And that was the final news of the day, the 4:45 news. Price dropped, so we did not have the first bounce trade opportunity. Instead, price dropped all the way. And trying to enter here, it's good if you're trying to catch a falling knife. But remember, we are working to ensure we get good trades. So after price dropped, in the next 30 minutes, price coiled up. First push, second push, and on the third push, still respecting the structure, price coils. When you see this, you start to smile. What is this? The low-hanging fruit trade idea. So basically, the entry was after this death candle. So this entire volume that maybe was targeting to push it even higher is trapped. And where do we target? We target the low, the closing, the opening price. That will be the closing price of Friday. Since in Asia, we did not establish it as much. So that will be our target, but also we'll have a keen look at the place where Asia broke at. Traders, this is why we always ensure you get paid. After price did this pump towards yesterday's London lower high, we dropped, trapping all traders above, and news continued the move. We got this low-hanging fruit trade setup, trade entry, which dropped, targeting the closing price of Wednesday. But key interest were around these levels. So while price reached here, it pulled back. This from the entry to this point is 100 pips. Learn to get paid. The market is always willing to snatch the money after giving it to you. So when price tapped this level and you are unable to continue, it was a signal to take some money off. 100 pips, and our daily target is 60 pips, 50 to 60 pips. So at this, take profit and wait for the next day. Clearing up the charts and moving to the next day. This will be Friday. The first thing we want to do is to mark our closing price. Always. And studying, we see the markets just dropped. Meaning to the 1 minute time frame, we see price action zoomed in. So price in Asia just dropped and we dropped, and think, where is price really wanting to go? My first idea was to yesterday's, we didn't complete the move, or did we? Maybe we are going to the closing price of Wednesday. So London, you get a low-hanging fruit idea, or low-hanging fruit entry signal, which dropped even lower. Indeed, price was targeting to complete this move, where we came till the closing, around the closing price of Wednesday, opening price of Thursday. Price reached here and we locked the low. How do you know the low of the day is locked in? Price does not break it. We respect it. If that's the low, then it's the low. There's no lower than that. So first thing will be price respecting. This, you could also term it as the low being respected at this level, but we see price pulled back for the low-hanging fruit in London, price came and broke right through. So the law of day was not in place. So in the gap session before New York opens, we lock the law of day. And if we have the law of day locked in, where do we target? The highs of the day. Superb. Let's zoom in to see how we could properly, or how we could execute this trade. Price locked in the low of day just before the session starts, and we make high highs on the inside, we come confirm it, and we start to auction higher, breaking the higher high on the inside, whereby we coil and explode. So we are looking to get a low hanging fruit entry signal, because price can either pull back to the low of the day, final retest, or we come back to where price started, where price began the explosion for the low hanging fruit entry signal, targeting the highs since the low of day was in place. So that's the first area I'd want to mark in my charts. We realize price, this is 3:30, that means the New York session is not yet open and we have no news, so we are waiting till 4 East African time. Price respects the bullish structure. This is lower high. So we are looking to enter here for the low hanging fruit, or at this point. Price came, we got this level. Price comes to these levels, confirms it, makes a beautiful M, and we pump. But will I take this trade yet? No. Why will I not take this trade? First, we are not sure if, since there are a lot of money resting here, whether this was the final level. Also, price action, behavior of price. Remember, timing, levels, and behavior of price. We dashed out of the area. And since we dashed, I'm like, let's first wait for this level to confirm that it will hold for us to get our entry, because we have already confirmed we are looking for buys. Why are we looking for buys? Because we have our low of day already locked in the gap session prior to New York Open, which was confirmed by this bullish structure being maintained. So price came, and the first thing we see, high highs on the inside. When you see high highs on the inside, it's a smile, since we know our setup and our trade idea is on point. We only look for the entry criteria to take the trades, to manage our trades. So price pulls back, and when we take all break-even trades that are around here, still respecting the structure, and this beautiful coil, 1, 2, 3, the coil for the entry, you enter around here, the stop loss here, because if you're to go lower, it means we are going to go deep, and you don't want to be risking over 60 pips as your stop loss. Take your entry, target high of day, target closing price, and price rushes. In a matter of 20 minutes, you have your 70 plus pips banked with just about 18 pips stop loss, 70 pips take profit. I don't care what price does after that. If it goes higher, that's all my setup was saying. And you take our money, make a good trade. And your weak, always strong traders. It's either your setup is there, you take it, or it's not. That was a wonderful backtest we had with you. I hope you got some insights. And for any questions, let's engage in the comment section. I promise to reply. And remember, if you got value and you want to up your game as a trader, you're serious about this is the channel for you. We do the back test. I'm not here to say your strategy is pathetic or anything. I'm here to help us read price action. If you trade pure price action or want to understand the markets better, remember, every back test, every piece of data brings you closer to understanding the markets. Have a nice weekend. Thank you. That was Aluta Trades. Subscribe, like, and comment.